Hey Steve, Andy, what's up?
Hello. Thank you, Scott. Hello, Andy.
Hey,
Happy.
Steve. Hello, Scott. Hi, everybody.
All right. Well, man, these weeks go by really quickly. It seems like this is like the benchmark milestone of a 7-day week. Here we are again at 5 o'clock Eastern on a Tuesday for the Trade Ideas Trade of the Week. Like Scott said, Andy's going to help us out there in the questions panel. And we will begin. So, sounds like you do have eyes on my screen. You can hear me. The old disclaimer, Trade Ideas is a software as a subscription company. We are not financial advisors. So please, if you're looking for financial advice, you're not going to get it from us, and you shouldn't. You should be seeking out professionals who took the fiduciary responsibility exams, charge you a point or two, and go play golf. Auto trading to your trade ideas. This is part of the slide now. I mean, you're going to be hearing more about it. If you want more information, the Brokerage Plus tool only works with interactive brokers. And right now, if you need more information at the bottom, you can see it there on the / Brokerage Plus. I spent some time yesterday. I just want to remind everybody again, this is a jet plane. This is a very sharp tool. This is a sports car, race car. It's not something to be taken lightly. It's certainly not something to come in and say, hey, I'm just going to plug into this thing and let it do everything for me. That's not how it works. You really want to learn how to walk before you run, and this is definitely running the automated Brokerage Plus tool. But for those that have market experience and know what they're getting into, and it's a pretty cool deal. You're not alone with Trade Ideas. Again, it's a 14-year-old program with a lot of robust layers to it. It's not something that can be learned overnight. So we have a lot of point of contact with our users. Every day, the trading room with Barry Anderson is open from bell to bell. Even prior to the opening bell, there's a lot of good pre-market stuff going on in there. A few hundred traders. A handful of really good ones that kind of help take the lead along with Barry, but in the meantime, Barry manages the room and keeps it focused. It's free. I don't know if I mentioned that, but that's a great price because what people are getting in that room is comparable to paying $79 in a lot of other rooms out there. Barry also helps people with trade ideas on the fly and demonstrates it with his desktop there. So if you haven't checked it out, it is free, and you can join at any time and kind of see what's going on, get a little taste if you have not been in there. Then we have the Monday through Thursday, webinars, of which we are speaking right now. Typically they're at 5 p.m. Eastern. Every day is a little different in terms of pre-arranged content, I should say. I helped Jamie out yesterday, and Andy's helping me out today. We'll talk about the trade of the week. Tomorrow, Dan and Brad talk about what's coming next. They usually showcase some new items coming in future releases. And then Andy kind of surveys the market on Thursday and comes up with some good content for Thursday after the market. And then Friday is always a 3-hour open session. You can see the times there from 11 to 2 Eastern. Feel free to stop by, ask any questions you want. There is no preconceived content. So we're basically just waiting for people to come along and say, hey, how might I scan for this? Or I'm having trouble figuring out that. Or how do I stop this from occurring? Or how do I get less returns, more returns? We're there to help for 3 hours on Fridays. And then the TI University at the very bottom on the next page is our university program. Every Monday through Thursday, it repeats on every Monday. We all four take control. We do a little bit of different content each day, but it starts over on Monday the following week, and we also have a pre-recorded playlist for that as well. Just a little announcement. I know Scott will probably make that announcement as well, but after this week of webinars that I just went over, we're kind of rounding third, getting ready to come into home base. A lot of people are on vacation, users and Trade Ideas employees alike. We are not going to be having the regular webinars for the final two, roughly a week and a half of December. But we will start right back up right after the first of the year when we come back in January. So just a little public service announcement there. And like I said, Scott will clarify that. So the man and machine combined is always the theme of the trade of the week. I like to remind people the brave new world that we're heading into is one where AI is an assistant to us. It's not our overlord. It's not going to do everything for us. It's not going to make all the trades for us. There's still a human component that has to manage things. And I'm speaking in terms of trading. it's still a good idea to keep one eye on the market and one eye on what's going on, what's working, risk on, risk off. There's no substitute for human and machine, just like that quote from Paul Tudor Jones explains right there. I even mentioned last week, IBM starting to get into the fantasy football league. So the fantasy football guys, very similar, parallel, akin to traders, right? We're sitting down with data and looking at it, analyzing it, and making decisions. So here it comes, guys. The AI is coming, whether we like it or not, but it's going to be a tool that we can use as humans to help improve, rather than just relying on the machine altogether. That's not really the way it's going to work. So going forward today, we'll do a market recap. Certainly lots to talk about there. Holly recap. Andy's got some thoughts to talk about on that segment. Trade of the week this particular week is the gold miner index. And just a reminder, the last 3 of the 4 calls for trade of the week have been defensive in nature. I'll kind of go over that again, but as we talk about the market recap, the point being there's no reason to shoehorn a long position into this market when it's not giving us what we are looking for if you're a bull, so to speak. There's really no place to hide right now. I want to kind of show you guys the sectors and how little opportunity there is if you're only wanting to hit a forehand as a long trader, so to speak, hitting with your forehand. And then I've got some concepts to show how to use the flip feature to try and adjust to the no longer buy the effing dip market. We are entering into a sell the effing rip market. So just a little help to try and orient you guys there on the docket today. So let's hit escape there. All right, let's go into, notice that I have the SPY up, guys, and notice I have the after hours. If you were paying attention into the close, we had a nice bounce off of lows, but that bounce was short-lived into the closing bell, and now we look at the after hours. We look at the after hours session, and we are back down basically to where the lows of the regular session was. So no real retreat, no real respite for the weary, or for the bulls aftermarket. I'll kind of let some of that aftermarket action bleed into what I'm going to say here. So let's take a look. Let's grab our fun pen. And a couple things of notice here. This new line, I put this line in today. This is a new pivot line. I'm keying off of this low back here, a little bit of an overshoot there, the low of that day and the closing price, the opening price of yesterday. So a brand new pivot line that we have there on the orange line of pivots. I'll be paying attention to that, especially going forward to see if the price action does bounce. What will happen if it bounces right up into, why is that not doing that? Hang on a second. Why am I not getting my, I'm going to close this. Weird. All right, so this orange line is a new line, as I was saying. We are now under pressure from this new pivot line. Again, there's about 4 data points on there that I found to be significant. Might as well just go ahead and put in another orange line down here from today's lows. I want to remind everybody before I forget, tomorrow's a big day. Tomorrow is FOMC interest rate decision day. And there's 2 camps out there screaming that how could you, in God's green earth, look at this market and this price action and raise rates into the face of this nasty storm. And the other camp is saying, we promised to raise rates. We shouldn't be looking at the stock prices. We need to raise rates to come out of the low interest rate artificial environment we've had for the last 8 or 9 years, and it needs to be done. So there's 2 schools of thought there. And my thinking is, today we tried to take out the lows of yesterday, dipped our toe below it, no follow through. We're pretty oversold down here at these levels, so it looks like we were just going to kind of park ourselves down here at this range. And again, I'm going to use these 2 orange lines, the high end and the low end. And I think tomorrow is going to be a catalyst, guys. That's why I brought up the FOMC. At 2 o'clock Eastern, we're going to find out if there are additional rate raises coming for the market. And if so, market might not like that. I don't know. I hate to predict how the market's going to react, but it's been throwing a bit of a temper tantrum lately at the sign of possible higher rates, and of course trade issues out there. But we're concerned more with technicals. So again, what I see here was this horrible attempt to bounce last week. We had that big spike on Monday, typically that's going to be a nice reversal wick right there. Well, the very next day we gapped and crapped all the way back in, and just a feeble bounce. I mean, you want to see the feeblest of all bounces? Look at Goldman Sachs, Andy. Here's that bounce day right here, and gave it all back, and then sideways, financials rolling over. The financials are looking really bad. I might as well just go into, Deutsche Bank again, had a relief rally, oversold, German bank. The 10-period moving average got a hold of it. For the last 4 or 5 days, it has just kept the lid on the pricing. Credit Suisse, even uglier. Tried a small bounce, caught the moving average. I mean, look at these. They're so fanned out, these moving averages. These are when the moving averages make most sense to me, when they're fanned out and the price is in a direction, up or down, not sideways. And so this down direction, again, that bounce was short-lived. Moving average throwing the price right back down. ING, same kind of action. So it's really ugly out there, guys. I don't know what's going to work in terms of swing trading, in terms of intraday trading. It was like a washing machine in there today. A lot of volatility, and the only thing we can do in volatile times is pull back our risk appetite, lower our share size, maybe even tighten our trade windows a little bit. But this is not good action, and people were saying bear market's back on the table back here. Well, I'm pretty much looking at the way we broke out of this giant sideways 3-month, 2-month trading range. We broke to the downside, and I think we are in bear market territory now. Maybe not technically. The IWM technically is there because it's 20% down, but I'm just speaking in terms of action. We had an attempt to try and rally at the close today, but that was quickly sold off at the close and after hours. This is not the kind of price action you're going to see in uptrends in bull markets. It was a nice run. It was a good 8-9 years or so, but I think the winds are completely changing, and I'm big caution flag to people who just started trading 3 or 4 years ago, and you have not seen a bear market yet. The other side of the mountain is not pretty, and if you haven't seen it, I suggest you retool and pull back and walk very carefully until you kind of figure out. And again, today in the later part of the webinar, I'm going to show you maybe a little strategy to start getting ready for a different market environment real quick before I hand it over. The NASDAQ, not quite new lows as much as the S&P, and I'm going to go ahead and say that's because of the financials. The financials in the S&P are having a bigger weighting. The big sell-off coming into all this was through Facebook, Google, and Amazon and all that. But that's not really what we're experiencing at the moment. The real weakness is not so much in the technology stocks, but it is in the banks and the financials. And then, of course, back to the IWM, Russell 2000, we are in 20% bear market territory. Look at these moving averages fanning back down again. Another possible leg. Anything you want to add, Mr. Andy?
No, also a reason S&Ps are charging much lower than the Qs is because energy, yeah. Energy.
We're gonna take a trip down sector lane a little bit later, but it's not pretty out there, guys. And all bets are off if you were buy the dip trader. It's going to be very difficult if this doesn't change. This kind of action.
What happens in a bear market is like you see this kind of ledge where kind of Steve has a line drawn there at the bottom that corresponds to some lows for this year. If he zooms out, you'll see them. And if we start breaking down, through these levels, then honestly, I've seen this game before. You start looking for the next level where we may dig in, and then the next level, and it just you have no idea where it's going to end. And I would not be surprised to see a 35% sell-off. Wouldn't shock me at all. But it's not our game to try to guess what's going to happen. But just be careful. Be careful because when you do get that other side of the mountain, it can get ugly.
Yeah, it was an old 70s movie about a good skier who had a bad crash, and it was called The Other Side of the Mountain. And it just kind of reminded me of what happens when these markets do these kinds of things. What worked back here does not work over here. So, All right, we'll look at the sectors a little later, but that's all I've got, at least for the general market. It's not looking good, and we're in pause mode. We're in a pause mode, holding pattern tomorrow to see what's going to happen with the FOMC. I'm pretty certain of that.
Yep. All right, Steve, I will take over the steering wheel here and let's see. We'll talk a little bit about Holly. And once again, let me zoom this back out. Let's always look at what she had to work with today. And this is the market. Well, first of thing, a red flag for me is I see a gap up, over a 1% gap up. I have noticed, and we've talked about this in here before, it makes things difficult for Holly. And, the price action today looks like we were heading down, nice little bounce up, went to lows, took out yesterday's low, and then the crazy bounce in the last hour, all the way, well, you can see where the wick went up to, basically a 2-point bounce there in the spiders, and then came down, there at the close pretty hard. And like Steve said, back to lows and after hours. This kind of action doesn't surprise me. It's what makes strategies so much more difficult in bear markets, or even bearish price action. Let's just call it right now. But and I know you've heard me say it in here before, and you're going to continue to hear me say it. Bear markets have a tendency to wipe out both bears and bulls, and this is the kind of action I'm talking about, guys, where you're short, and then all of a sudden the market takes out yesterday's lows by a few pennies, and what happens? It bounced, like I said, a whole new 2 points.
Can I interject a moment? This is the human and machine element. Is that what you're going for? Kind of.
I wasn't, but go ahead. No.
Well, this is kind of the human and machine element. You can't just expect Holly to load up on a bunch of shorts and then you see the market dip its toe and take out yesterday's low and then reverse quickly. That requires a little bit of babysitting. There's something going on there in the backdrop that needs attention. So I'll just leave it at that.
No, it's very good. And I can't remember if it was your webinar last week or my webinar. I was talking about how you have a much better advantage on getting out of trades than Holly. And Holly is designed to find great entries for you, but she is not going to be as good as you is when it comes to getting out of the trade. Your eyes can see more things than she can, and getting back to man and machine, like Steve was just talking about. All you have to do is look at a histogram here, and this is in risk on, pretty much sloppy the first several hours, but then, the short started to really work for her when the market was, down to lows. You see the histogram here getting up quite a bit. And then what you see that Holly may not see, now some of her strategies do look at yesterday's price action and things like, but not all of them. It depends on which filters make the cut in the final optimization. So this is where you may say, okay, we're digging in, bounced a couple of wicks here in the 15-minute chart after we penetrated yesterday's lows, and now we're getting a nice bounce where you can pound out of your shorts a lot quicker than Holly. Risk on is going to continue to run in Holly all the way through this mess. And even though risk off, I'm a good example of this TRGP. I can't think of a better trade today than being a human and having this spit out at me, right here, and being able to manage this. Basically you can see just a downtrend. This really didn't even bounce, but I wish I could find an example. Let me tell you, to see if I can look at one that did kind of go against. No, that one actually kind of got better. Anyway, I didn't have this planned. I kind of just ad-lib in here, but nonetheless, this, you can just, like I said, you can see the histogram, and for whatever reason, I don't know which ones, but obviously a lot of these trades went against her in the final hour on this up move, and thus you have a bad, the risk on actually went negative after being up nicely. And so this is Holly 2.0. I don't know why. I don't know if this is right over here, Steve. I'm going to have to look into this. This 0.91. It could be, and it's just my numbers are off because I have mine set for 200. Yeah, I guess it could be that way. But and I'm going to get back to, guys, just being, a lot of people I know are probably scratching their head saying, well, Holly hadn't been doing all that great lately. Well, let's face it. Holly, just like yourselves, hasn't traded a bear market either. Now, we suspect she's going to get better because we are going to be feeding her better strategies in which she can take and optimize. And remember this, she is looking at 64 days worth of data. Okay, now as this bear market kind of wears on and we get more bearish data into the last basically 3 months, and we're working on it. Just got to look at the spiders. Here's what I'm anticipating is, we start getting more action like this for a couple of months. Now all the data is going to be in there. It's going to be basically, bearish data, and I think more than likely she will definitely get better trading this bear market. But when you get price action like this, guys, I can tell you right now, there's no strategy that's going to work. I mean, when you go to lows and then all of a sudden you bounce up 2 points, in a 30-minute time frame. Trust me, it's going to be tough for any strategy. So what do? Well, you pull back. Maybe you're just focusing on Holly's shorts now. Maybe I saw 5-day bounce in here. 5-day bounce used to work all the time. And let me think, it was in Holly Gorell today. Let me pull this up. When you start noticing things like that, yeah, look at these 5-day bounces. Let's pull up a couple of them. These used to work all the time in a bull market. Well, I think what you're going to probably start finding is, as the bear market continues, if it continues, you're going to see this make the cut a lot less than it has, because it's not going to back test very well. Okay, all this data is getting computed in the system every night, and they're like, whoa, okay, this one's not working as well anymore, and you may see this 5-day bounce not work anymore. You'll see more short strategies making the cut and less long strategies. So, am I discouraged? No, but am I disappointed? The last week hasn't been better. It's been a tough market for everybody. And once again, Holly's been around for 3 years, so this is kind of new for her too. And the good thing is, we can feed her new strategies that she can optimize, and she's going to learn more and more as this, market probably gets more volatile. And, from what we're seeing, could possibly, go down even quite a bit further. So I don't want to break down a whole lot of trades today. I mean, she didn't do bad. I mean, you can see over here in the thing, it's not bad. A lot better than the S&P did. But at the same time, we expect her to do better, and she will. And I'm pretty confident she will get better as this bearish tape continues.
My hope is that we'll start seeing more of the topping tails and putting on the brakes and the fading type strategies. That's my hope. Yeah.
But I want you to understand, a lot of people, I think you look at risk on, and you see where she could be up maybe some days $4 or $5, and then all of a sudden, the market, happens, and all of a sudden drops or goes up, whatever it does to go against her, and then all of a sudden that risk on just dissipates, and like it did today, where it goes all the way down to zero. Risk on is going to continue to run, but that doesn't mean it doesn't provide you with a chance to make, some opportunity, some alpha, during the trading day. But I also know it's easier said than done, guys. I just Holly may have the advantage when it comes to getting in trades, especially the momentum trades, and you may see a little slippage, but you are definitely going to have the advantage in managing these trades to the exit over Holly. All right, Steve, that's about all I have.
All right, that's about all one can say with today. I did the 201 webinar, and there was really no good example of risk on, risk off across the board. There was no good example of long bias, short bias. It was just a mixed bag, and here's what it is. All right.
I think you may have hit your mute button, Steve.
Thank you. I did.
Okay.
So let's go back to, again, like I mentioned, the last 3 out of 4 trade of the weeks were defensive. We had one for SDSs. All right, those are doing okay still. We had one to go to cash. There's no harm, no foul in that. And then this week we picked GDX. I can't sit here and say that this was something staring us straight in the face this weekend that said Trade Ideas says buy GDX. This was more of kind of a little bit of 10,000 hours of seeing this song and dance before, been to this rodeo before. There was really nothing decent. And even if there was something decent, let me just point you to what we were looking at. Okay, there we go. That's what we were looking at going into the weekend. A complete failed washout bounce, which should have at least given 3 or 4 days of nice upward movement, but that only works in the up markets, in the bull markets. The front side of the mountain. Remember, we're not on the front side of the mountain anymore. We're on the back side, and there's a lot of peril and spots to get in trouble. So going into the weekend, we had a rejection that should have built on that, rolled over. The moving averages did their part. They're starting to fan out again. Notice that. And then rolled right back over, making a new closing low. You don't see a low closing anywhere near this. So we went into the weekend with a new closing low. Now I'm going to show you in a second. We're going to go down sector lane here in a second. We're not going to see much to look at, but that was part and parcel the reason that GDX really came about. There may have been some names within GDX that we could look at, but for the most part, the actual sector in itself was showing a lot of strength. Again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about the last 12 days, moving nicely and higher. Last 10, 12 days in the S&P, hideously moving lower after a failed breakout, slamming right into one of my resistance lines. There was no reason to try and put in an email going out to 40,000 people to shoehorn some long trade in some stock just because we have to. That's not what we're here for. We're here for education. We're here to try and help people. And looking at the way the market looked going into the weekend, there was no reason absolutely at all to try and shoehorn a long side specific stock name. So we came up with the GDXs, and it will probably make more sense to you after we go through a trip down sector lane here. Well, interesting note, GDX was having a nice move today. Look at that, green stick. Well, in the interest of my simple moving average, the 10-period moving average held that price all day long. And look at this, these are my favorites. When we actually get ahead of ourselves and then go sideways, 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 moving average comes up to force the price even higher. So very strong technicals again today in the GDX on the heels of good strong technicals yesterday, bucking the trend of the bigger picture. So before we go into sectors, you know, Andy and I have been in this rodeo long enough to know that when the markets get defensive, they typically go into defensive positions, and that can be gold, it can be gold miners, and it can also be treasuries. So with that in mind, let's take a look at the sectors. So we'll pull this down, expand this out. So the idea, and where I'm really going with this, and I think I even put it in words, there is no place to hide right now, guys. If you're a long and your mandate is to buy stock and you're a long fund and you're supposed to put money to work to the long side, your pickings are about as thin as they've ever been. It's really bad, okay? So here we go. UNG, not a great looking daily chart, fell from graces. But here's our friend yesterday was leading the pack, gold miners, and there is gold. So once again, looking at this chart versus the S&P, it was kind of a no-brainer unless we could find something else. So here's gold going from the lower left to upper right. Very good. Airlines, garbage. Home builders, garbage. Steel, super garbage. IYR real estate, hideous day yesterday. But coming into the weekend, it's holding up, not too bad, but now it's broken. Treasuries. Well, that's a nifty looking, technically supportive chart. If this was a stock, I'd be wanting to buy it. Look at these moving averages fanned out. Sideways action, sideways action. Now it's above the 200-day, and here comes the simple 10 moving average pushing the price higher. Maybe this is too much info, but yesterday I did log into one of my retirement accounts and went a bit more exposure to bonds based on what I saw over the weekend here. So far, all we've seen is gold miners and bonds looking decent. That's a really nice looking chart there. Let's continue. China stocks, garbage. XLK, technology, crap. Agriculture, garbage. There's gold. We know how that's working. Retail, hideous. NASDAQ, we've seen that. Silver is playing along with gold and silver. Not too bad. IAI, what is that again? What's the IAI? Let's check. The broker-dealer, I forgot. Broker-dealers, people are not making money. People are not making trades. Surprised? I'm not. It's tough out there right now. Dow, we've seen that. Spider, we've seen that. Russell 2000, we've seen that. Semiconductors, looking like they want to make another leg lower. Solar's not exactly at their lows, but in no man's land. Financials, hideous. Healthcare, that was a place that was pretty solid, but not anymore. Banks, vomit. Banks, vomit. Energy, as Andy said, hideous. Walked to the woodshed. Oh, biotechs, trying to hold on, and they broke. They're out. And then the energy spider, hideous. Oil, hideous. Did you guys see anything in there that looks really good to the long side besides gold miners or treasuries? I didn't. Did you, Andy?
No.
It's really, really slim pickings out there right now. And I'm not really sure what's going to happen for the next trade of the week. If this is the way it's going to be, we might have to figure out how to retool the trade of the week rather than going here and, for the sake of picking something long, just picking it long so it gets out. But I hope you guys saw that. That was a pretty ugly sector rundown. There is no rotation. The rotation is gone. We talked a lot on the way up about how certain sectors would start to die off, but then others would come back to life. And that's the rotation. That's how it works. The baton is passed from one sector to another. Right now, they're all just getting a big, bad spanking. And the smart money is at least trying to hide in gold miners and trying to hide in buying treasuries. And that's it. So I just felt that was probably important to run over based on where we are right now. Just not seeing a whole lot of good news out there if you're trying to buy stocks and want things to go higher. Did you have something you were going to say?
No, I agree with you. I mean, sometimes and we're not there yet, but if we do see this continued, momentum down like we're seeing, there comes a time, and it's not so much for day trading or maybe even not swing trading, but if you're an investor and you see something, just getting like a high quality stock, you're just getting clobbered, maybe Apple, Nvidia, something that is reputable, making money, decent earnings per share. This one actually is holding on compared to its lows back last month versus, so that may be something that to keep an eye on.
Relative
is actually up today, So yeah, I mean, I'm just saying there comes a time where there could be some value plays on a longer term time hold where you can start nibbling. And I'm not saying going in and buying 100% of your position, but you start nibbling. And I think it's too early for that. But another 5%.
What the Fed has to say tomorrow, and maybe see what the next couple of days bring. One other thought that I had. What was my thought? Since the GDX is strong, what are some of the more interesting names in the GDX? Maybe Newmont could be in it, is an old staple. AU.
I haven't seen anything stronger than AU. And I noticed this I noticed this a few weeks ago, Steve, and I almost told you about it, but the market wasn't doing as bad. But gosh, yeah, look how that was just setting up for that break above that.
So what we're doing here is we're saying the index is up, the sector's up. There are a few stocks that can get it going like this. Where's the next one? Is ABX still okay? ABX is kind of consolidating here. ABX might be one to keep an eye on.
Check out that tail yesterday. I saw that.
Yeah, look at that. That's how bottoming tails are supposed to work. And uptrends come back, fill the gap, push and close higher. Does RGLD still worth anything? Trying to come out of its base. So AUY.
What about GOLD? That's always been a bellwether.
Not bad at all. So again, it looks very similar to the one we just looked at, didn't it? So there are some individual names, guys. Might be a good time to brush up and go out to Yahoo and try and find out what some of the better gold mining companies are out there. Now, GDXJ is a whole other animal. That's the junior miners, and we'll notice that the IWM is sucking. The Russell 2000 small caps are sucking. So it would make perfect sense that the small cap gold miners aren't quite as solid as the regular gold miners. So. And then lastly, I didn't even point this out, this cleared its last hurdle with vengeance today. The declining 200-day moving average in GDX was taken out and closed above. Very important. So watch the gold names tomorrow, guys. We'll see what the FOMC news brings, but that seems to be the hot scent that's going on right now in defensive mode. All right, where did I want to go next? There's no place to hide. We saw that. All right, so if buy the dip is not working, and I've done this many months before, we want to start looking for some scans that want to fade the rips. As I mentioned to Andy earlier, the Holly ones, like putting on the brakes, topping tails, things that are jumping in the way of something that's moving intraday to the upside and then starting to stall out, and we want to catch that roller coaster before it rolls back over. We don't want to short it as the roller coaster is down, hitting in the bottom. We want to try and find those really good entries. So to do that, I've just got a neat little thing to remind you all that Trade Ideas has. This scan right here is called pullback to the 50, and here's a great example of what a pullback to the 50 would look like. The blue line is my 50-day moving average. Now, if we were in a bull market and we were swing trading pullbacks, this would be very interesting.
Mm-hmm.
This is your buy the dip market. Big 3 days of pullback. Look at that. Actually took out yesterday's low by a few pennies and then jacked right back up into the close. This thing looks like it might be ready to bounce. The problem is this is our backdrop once again.
Mm-hmm.
So rather than trying to shoehorn and only play tennis using your forehand, running over to the left court as far as you can just to hit a forehand because you're comfortable only hitting forehands, I pose this question to you. It's time to start hitting backhands in the down markets, selling the rips and going short and fading the momentum. So if this is a buy the dip, pull back to the 50, what would be the mirror opposite of it? Well, it'd be something that would be bouncing up into the 50s, and it could signal a possible short sell on the swing side for maybe a couple of days of weakness. Again, so this is our target one. We've been using this for a while. This is a pullback close to the 50 there again. Some of them are a bit more squirrely, but here's what I will propose to you guys. Take something like this, which is a buy the dip scan, right click and duplicate it, and turn it into a sell the rip by going into our configure mode and using the one simple button called flip. This will mirror the thing exactly. It'll put it upside down, give you everything you wanted to the short side. So no longer are stocks pulling back into their 50, they're now running up into their 50-day moving average. Let's take a look. Oop, it's not exactly a great one. This one's running up into its declining 50. I mean, they are what they are. That's something very interesting. So how'd you like to be watching this thing to want to go short, KB, and you short it down here, and then it immediately goes against you? Well, you'd probably covering right about now. Well, I've said it so many times, if you're going to make money in the market, you've got to run against the herd. You've got to be buying when people are in fear, and you've got to be in fear when people are buying. So in order to do that, this is the type of alert that we can cross up and help our brain turn these charts upside down and say these things might be ready for a short. And again, the person who shorted in the hole, remember, shorting in the hole is waiting for it to break down prior lows, but almost always it's a short-lived trade. It winds up bouncing everybody out, and that bounce comes up to a significant point, which oftentimes can be a declining 50-day moving average. Point being, guys, we just turned a buy the dip scan into a sell the rip scan using the same parameters, stocks that are bouncing up into their 50 rather than stocks that are pulling back into their 50. And so I'm just trying, yeah. Mm-hmm.
I would love to do a little test if you don't mind. I mean, because he's right. I mean, this is how you want to short, because we all know, just look at today's action, shorting in the hole after we took out yesterday's holes, what happens. So let's go to history on that one and put it back on
The new one?
Yeah, no, the one that you're in. Yeah, the one that you just flipped.
What I made. Yeah, okay.
Yeah, put it back on. Put it on December 3rd at the close, and let's see what pulled up in there. I'm just curious. That's the mark. That's that move we had in the spiders, the last big move. We were trying to break it. Yeah.
A lot of stuff.
Yeah. And let's just click through a few and see how. Look at that.
It's going to be.
Look at that right there. Yeah, you can see.
We need to look at the 6th. So let's orient our eye to the 6th.
No, the 3rd.
The 3rd. I'm sorry, the 3rd. Thand you. That's the 4th, and here's the 3rd.
Look at that.
I should get my pen out, but highlight right here, basically that wick right there as we start to go down. And I'm just doing it in alphabetical order. Oh my God!
No, I know. Look at that. So
wow.
This is so keep this in mind. The next time we have maybe 3 days bounce in the market, this is a great alert to pull up, because I'm telling you guys, if you try to short the same way you do go long with big size, you are going to get chopped up and you're going to get run out of this business. But if you can take trades like we're showing you right here, short a small size, when they go down, we all know how hard they go down. It's, what do we say, stair steps up or elevator down. So this is a strategy where you could come in, put on 100, 200 shares, and let them work for you.
Maybe even add to it if it starts working. Yeah. I'm so glad you showed me that day in history, Andy, because I was really struggling to try and find these types of visuals here. Okay.
Yeah.
Those are very impressive. Yeah. And there's another one. Boom, right on it. There's another one. 4 in a row, 5 in a row. Look at that. Everything's stalled at the 50 that day. Market's a different market. So I see your comments, guys. Here's what I'm going to do for you. I'll go back to live always. I'm just going to drop my one that I just basically.
Once you rename it.
Yeah, let's rename it. We're going to call it Sell the Rip. Sell the Rip at 50 SMA. That's the new title for this window. And I'm going to go ahead and drop this for everybody that wants it. So save and share, copy, and drop it. So I'm so glad you showed me that, because the scans that Andy pointed out there on the 3rd, those are the ones in my mind that I wanted to try and find today. But it's hard today to find them because things are pretty.
The market's been selling off for 4 or 5 days in a row, and it's so you're not getting any bounces.
No, but you're right. That was the day, December 3rd. All right, very cool. Gosh, that was pretty cool. All right, so that's off the history. I'm going to go ahead and close that, and I'm going to go ahead and minimize this. And we're getting towards the top of the hour. Before I bring Scott back, we did mention on there that we could look at a couple charts if people want to. We can look at some charts and see if there's anything. It always helps, if you put in a symbol for us to look at. It always helps to know if you're long or short or thinking about getting long or short, and we can take a look. But that kind of brings us to the end of the content today, barring any chart requests that you guys might want to look at. So question panel is open if somebody's got one. If not, then we might end a little early today.
It's that time of year, Steve.
Yeah, people's minds are on travel, food. Charts are broken anyway. Yep. Merry Christmas, all aid. Even if we did look at some charts again, remember 2 o'clock Eastern tomorrow, guys. Big time of day. It's going to be a lot of volatility and action. So tomorrow, you can, if you're doing your thing, just pick off a few things if you're a day trader in the morning, but be aware that a lot of people go to cash as you get close to 2 p.m. Eastern time on a Fed results day, and the whatever comes out of the news from the Fed probably will move the markets. If they get scared and don't raise rates, that could get interesting, but we'll see. We're here to react, not predict. All right, guys. See you. Thanks so much. Is there any downside?
Thank you, Waleed.
A good question from Randy. Is there any downside to limiting repeats to once a day? I don't think there's a downside to it, Randy. If you're a momentum trader, it probably wouldn't be a good idea to do that. Maybe limit them to once every 5 or 15 minutes. Once they're in play, they're in play, but you might easily forget about something if you suppress it for the whole day. That would be my thought. It just depends on what you're trying to accomplish, I think, with your method there. Nonetheless, all right, well, Scott, if you have your ears on, I'll put the slides back up and you can walk us out.
All right, right on. Yeah, a couple items on the way out. There's still time to get a deposit in for the next wave of Brokerage Plus. It's just $100. The total cost is $1,100. You won't be charged the balance until we release it in January. But this gets you in line to do that. And we also have paper trading through Interactive Brokerage for free. You can learn all the details at trade-ideas.com/brokerage plus. So learn about adding auto trading. We're going to be adding AI to Brokerage Plus early in the first quarter sometime. We don't have an exact date yet, but get ready and you will be among the first to use it. We have a podcast. Although we already released the last official podcast episode for the year, we will be having a special guest episode released this Friday. So make sure you catch that by subscribing to Trade Ideas Podcast and whatever app you listen to podcasts in, and then you'll be ready to get that special episode as well as the first episodes next season as soon as they come out. There's a great book that both Steve and Andy contributed chapters to. Trade-ideas.com/ebook is the place to go to get it. Just put in your email address to get the download link. It's got 5 strategies to help you survive and win in a crazy market, so make sure you get that. There's a discount code good this month to save 15% off your first month or year of Trade Ideas. It's Tis the Holly, all caps. And that can also be used to do an upgrade from standard to premium, so keep that in mind. Also, send any of your questions to info@trade-ideas.com. You can follow Steve at Today Trader and follow us at Trade Ideas. Also, Trade Ideas Pro is the handle on Facebook to like and share stuff we post with your friends. Thank you, Steve and Andy. We'll have a couple more webinars this week before we go dark for the rest of the year, and then we resume the second week of January. So stay tuned for the invites, and send all your questions to info@trade-ideas.com. Thanks, everyone.
All right. See you next time. Thanks.
Thanks, everybody. I'll see you Thursday. Bye-bye.